All right. Hello, YouTube. Hello, Instagram. Hello, Facebook. How are you doing? So welcome to Startup Business Q&A episode 96. Happy Monday morning to everyone who's joining in. Wow, it's weird seeing so many of my faces in front of me. If only this reflected life and there were 3 of me as well, that would be fantastic. But sadly, it's not the case. Hi, everyone jumping in. I'm just going to wait a couple of minutes whilst everyone gets on board on either Facebook or Instagram or YouTube. Thanks very much for all the questions that come through already. I'm just going to wave at you all. Guys, there's some fantastic, so many of you on Instagram, so thank you very much. Hello, Marco on Facebook. Hello, GB Dating. Hello, Shara on Instagram. Hello, Nadine on Facebook. Everyone give us a wave if you're here, and I'm going to start in a sec. So this is today I've got a load of questions from different people, and 1, 2, 3, 4, 5, 6, 6 so far. If you have any questions you want to ask me about your startup business today, no theme as usual. Most of the time we'll do that. Just ping a question out and we will answer it straight away. But today a couple of questions have come in about raising capital and generating sponsorship for businesses. So I want to tackle that because I think it's something I've done personally. I've closed sponsorship deals myself for businesses I've worked for, but also for me. And there's some technique in there I think that's really valuable. Hi, Ian, checking in from Connecticut. Everyone else, let me know where you're based. It'd be really nice to see where we've got people from all over the world. I'm not going to say what temperature it is here in the UK today. Christine, hello, thanks for joining in as well. I'm not going to say what temperature it is here in the day, because there's a lot of US people watching, I know. And for an Englishman, something like 20 degrees is pretty warm. 25 is like stinking hot. And so I presume over in the US, and Shara, I know you're over in India. And so you guys know what hot really is, but I've just managed to stop sweating. I've got a fan on. I've had a very, very cold shower as well. So thanks everyone who's bearing with me as I sweat my way through the day. So really simply, there's quite a few good questions about capital and sponsorship. And I think we could talk about the obvious, which is, how to just pitch someone. I think we can go a bit further than that today, because the things I've tried are way more interesting and much more fulfilling, but more importantly, that they're more effective as well. So we're going to get into that. And in terms of just an announcement, I wanted to say thank you to everyone who's given so much love on LinkedIn, here on Facebook, on Instagram, and I'm not yet shared on YouTube actually, about episode 100, which is only, or now 5 weeks away. And we're going to be in the Shard in London live. So thanks to Site Improve, to Sarah Rowan, the managing director of Site Improve UK, and also to Anna Soricio for organising that and for sponsoring and in a way kind of hosting it. So thank you everyone who is making that happen. Those of you listening on the podcast, hello to you as well. So let's start the questions. So let's start with Joe Rossano. He's asked me, Richard, what's the best way to obtain private capital? Now, I personally haven't had anyone from my personal businesses give me any personal capital, but I have gone out there and generated capital for businesses I've worked with. I've also invested personal capital in companies, so startups. One thing I think is really valuable here is therefore my perspective of someone who invests in startups and what, as a private investor, so someone who has capital that has been put into businesses, what it is that I've actually looked for. And I think that for some of you, it's going to be a bit annoying because what you want is maybe the quick fix. That's not a suggestion of you, Joe, but we all know that that's the case for many. When it comes down to generating really an income, not an income, rather, really generating some capital that's going to help you to get your business into liftoff, what you need to understand is if you purely focus on the commercial side, a lot of private capital is going to be coming from, sure, people who have some money and maybe are investors, but also people who have some money but aren't investors. Here's the thing. When I first invested in a company, the first time I did it, I wouldn't have classed myself as a kind of an investor. I would say I was someone who had money and I wanted to do something interesting with it, and an opportunity came along. So what you need to understand is that there are two types of private capital investors. Now, one type is one who has that as kind of what they do. And what that means is it's someone who is going to be really looking at the numbers and doing the due diligence. In a way, you should kind of be looking for people who have that intelligence anyway. But the other side is people who are wanting to put their money in something that feels a bit more interesting, or maybe is going to be a bit more lucrative than, you know, sticking it in a bank account hoping to accrue a little bit of interest. So what I looked for was the touchy-feely stuff. I get it, but it was also effective in a way of generating or creating a situation where I knew I was investing in a good business, or one that had legs. So what I'm saying here is if I wanted to go out and get money from my business, from private capital people, I would need to be focused on the community and the conversation. What you want to do is have a reputation precede you, ideally. What I'm saying there is having, for instance, an online presence where people think there's something very interesting about you. Maybe there's, you know, you're in conversations, and being part of other people's conversations is a very valuable thing here. If you are quite abundant in the sense that people are seeing you a lot, they're tuning into you, they're seeing you each day, showing up on their news feeds, but also you're sharing things that are of value to them, that's going to catch attention. That's the start point. Sharing your world, so sure the climb, but also the wins as well, also gets the audience in a place where they're starting to feel familiar with you. Trust and familiarity are epically important when it comes to having people start to feel comfortable about potentially investing in you or doing other things. Now, what you need to understand is that if you spend enough time with the community in the same way as if you spend enough time with friends or family, you really get to know people well. I see over on Instagram, we've got Tina Robinson. Hello, so Christina. Should I call you Tina from now on, or Christina? I don't know, but she's an example of someone I've met through LinkedIn. The LinkedIn fam hashtag is an example of a great community of people who support each other. And we don't know each other intimately, but we know each other quite well. We've hopped on a call before, but we've also spent time just on each other's posts and each other's conversations. It doesn't suggest that Christine's necessarily going to invest in me, but if she was someone who had some capital who might invest in a business, because that's an interesting thing to do with money these days, what it does mean is that I'm positioning myself to be in the best place for the ask. So when I first invested in small businesses, I wasn't really invested just in the company. That was probably 20% of the reason why. And it looked decent. There was experience. They seemed to have their head screwed on the right way. But I was mostly investing in the person. There's someone I'm meeting in a couple of weeks' time from San Diego. She's coming all the way over for an event with her family, and I worked with her business early on. It was actually not as an investor, but kind of working with her. And we kind of got into discussion for a long time. There's several months of building a conversation and building a connection, and we ended up working together. And it happened because there was trust and familiarity and comfort. There might have been a guy with more money that could come along, but I'd like to think that there was a connection there, which is the reason why we hit it off. And so there's that trust that, you know, you've got each other's back, and also you're going to do your bit. So when it comes to then asking for private capital, what it needs to be is really a long play. I believe you need to be spending time with people, getting to know them, and then talk about, you know, the kind of opportunities that are coming up and what you might need. And if someone feels comfortable enough and believes in you, if they have the money, are likely to invest. Another way of looking at it is that private investors or private capital investors, you don't have to look for one, okay, who can give you all your money. There's nothing wrong with having several of them. And I feel that whilst I wouldn't ask for family for capital, because I feel there's much more of an emotional attachment there, I do feel that if you ask for close acquaintances, people who really believe in you and trust in you for some capital investment with good terms, they are very much more likely to say yes. The stereotype is fairly true when it comes to looking at kind of professional investors. These guys overwhelmingly are looking at lots of opportunities every day, and they're very much looking at bottom line, which is cool, and that makes sense because they have maybe a slightly different agenda. But I feel what's exciting is that if you work with private investors, people who just simply have some capital, some do have it literally lying around, and maybe it's inheritance or something like that. It does mean that these people potentially are interested in taking a punt in the person. The more you engage in community, the more people are going to like the kind of vibe you off, and that really is going to be your leverage point in the end. So the best way, in my opinion, to obtain private capital is make the people who could give you capital feel so compelled to be in orbit around you that you maybe can ask, and maybe you ask for something small and they're much more likely to say yes. The other thing as well is if you're getting people to invest in you, and that might be in time. This is the same as when I built a sales team. One of the things I asked for, or one of the things I did, was I focused on making sure I was really getting into being as generous as possible. So when I invested, which is the best word, invested in the people who I asked to join a team to sell with me, what I did was I focused all in on really making sure that whatever their expectations were of what they might get out, I gave them huge amounts more. So I remember when I was building a team a while back, the finder's fee, if you like, for the product they were selling, industry average was like 10-15% commission. And I gave them 30. Because the reality is that these people are going to do things for me and I give them double what they might expect. That level of generosity means you get so much more in return, simply because it's almost like you're leveraging a debt of gratitude. And I think kind of that's a good way of doing it, because everyone tends to win that way. So that's a long explanation here, but hopefully that helps there, Joe. There's a lot in there, but be willing to work on in the long term, so that when those moments do come up where you might need something, you've got a pool of support, a power base, as some people call it, that you can draw from. So you invest in time spent against the community, especially when things are going well. Get them knowing how you're working, what you're into, and then when the time comes when you do need something, there's this sense of, well, of course, hell yes, because how much do I buy into you? When you go straight in for that ask first, it just doesn't tend to help. Okay. So let's just have a look. There's quite a few comments coming through. Thank you very much. A team, you've asked here, what are your thoughts? I'm trying to look underneath because it's got phone on top of a phone. Your thoughts on crypto ICA as a way of raising funds? It's the same principle. I was involved with investing in an ICO a few months back. So I bought some crypto in that particular ICO. And it was interesting because that's the perfect example of what I've just suggested here. I bought the guy who I have a deep amount of respect for, who has shown that he gives it his all. He's got great values and great heart, and I back his knowledge as well. So that's that community management thing you're just talking about here, Christina. So the reason why the guy got the sale from me wasn't just because his ICO felt good, because the problem is with marketing and with a good slide deck, all ICOs look decent. And most people launching ICOs will have seen how other ICOs were launched. By the way, ICO is like an IPO, initial public offering of a business, but it's initial coin offering. So it's for crypto. It's a really simple thing. Most people check out how other people have done it. Then they copy it. And then everyone looks really good. And of course, then if you've got a good slide deck, well, how do you differentiate? It's the person. Bought into the guy. He wasn't dodgy because I've known him for a couple of years. That's as simple as that. Tina, you'll win because you're great at building community. Okay? And you show up every day on other people's conversations. And if you do that enough with the right people that you've connected with, people will buy into you. And so why wouldn't they want to buy into you? Because there's that familiarity and trust. That's huge. That's really important. Okay, let's go on to another question. Ian Tiska, who is an ICO man himself. So there you go, perfect time. What are some of your best tips for personal brand development? What should some people consider when building their personal brand? I think increasingly I focus on being part of the community. I genuinely think, if I look at how, I mean, I'm in no way absolutely huge on LinkedIn, but I've just ticked over 2,700 followers in just over 3 months. Almost, I think every week I'm getting probably another 200 followers or so based on the content going out. But I genuinely think if I had to choose between posting content each day and being part of the conversations in the community, I would choose the latter for building a brand. I genuinely would, because you can, it feels like that's a slower brick by brick approach, but there's so much more depth to it. I feel that that would be more effective. And I think without question, the leverage for me in building a larger LinkedIn following, and seriously, guys, if you've not tried it, you do need to jump on it. The opportunities that kind of, I've been offered jobs, I've been offered a speaking gig or two, I've been offered so many consulting calls. I'm trying to catch up with them, to be honest, and the odd bit of influencer marketing here and there as well. It's fascinating that it's all because of just being abundant and amazing people, very high up people, because of course LinkedIn's full of decision makers as well, are all able to see you, and you're getting fantastic connection requests every day. Some very interesting people coming in. Yes, so it's exciting to do that. And I think that looking at building an audience as part of kind of in the way of building your in terms of your brand development is about being part of their conversation. So not when someone comments on your post, you just put a response in there. It's going away from home base, finding people who are having great conversations with other people having great conversations, and then responding to them, okay, on their threads. So not just being selfish around yours, but also helping elsewhere as well. That's really important, because then you're showing up everywhere, okay? Otherwise, it does feel after a while like you're a bit out for yourself. You know, you need to try and avoid that big time. See if I've got a better angle on my YouTube stream. There you go. That's all right. So I'm just trying to look at the question here. So the other thing as well is, I think that you need to also, with your brand, you need to have clarity. That's really important, because a lot of people aren't really clear on what they do. If you spend any amount of time with me on LinkedIn, as well as the fun, because there's a lot of video and things like that, and good chats and things, the focus is very much on sales tips, marketing and building community, and that kind of that space within business side of things. It's not accounting or tax. It's not sports. It's clearly focused on the sales and commercial side. I've just put out a post, for instance, today with another sales tip. So your signal, as in talking like a radio signal, your signal needs to be really clear. And to build a clear signal, you have to have that consistent signal, frequent and consistent. And that's my CARE approach to social media. So those of you who have not heard of this before, you can check it on YouTube. But CARE, C-A-R-E, is the approach I use when I build my to build social media that's meaningful. C stands for consistent. So you're there every day showing up with content that's relevant. Sorry, rather with content for your space. A is abundance. So I've dropped my questions. A is abundance, which means you're regularly showing up. So not just once a day, but also several times. Okay, so abundance is A. R is relevant. That's the point about being pure in your signal, not just randomly posting, a video of a cat playing the glockenspiel, something, always aligned with kind of your line of focus of your business. And E is engagement. And by engagement, it's then thanking people for the messages, thanking people for getting involved, asking people questions, stimulating discussion. Okay, so consistency, abundance, relevance, and engagement is absolutely essential. Otherwise, you end up missing it slightly. You're getting out content, but you're not engaging with the audience, or maybe the other way around. And I feel that really does help a lot in order to kind of build clarity. Those who have followed me for several years will know that it's, the Startup Business Q&A kind of embodies what I'm about. It's about being with a community. I've got several platforms all streaming right now, but throughout the week as well. If anyone asks a question or sends a DM, Nancy from Kenya, I know you've just hopped online here on Facebook. I know you asked me a question earlier last week, I think it was, and I jumped in to try and help you there. I hope I did. But the idea is that, you know, by constantly helping in that community, in that space, in that particular subject area, it becomes very clear after a while to your community what it is you do. That's essential for your brand. The problem is you get a lot of people who are brand consultants and they focus on, oh, you should have a consistency with your logo and with your graphics and things. It's like, yeah, but that's not the major driver. It's not. I mean, it helps, but the main thing to start with is making sure that your kind of values and message and noises you make are on that particular line. Okay, so that's an essential question there. Nancy, good to see you'll be in the UK on the 25th of June. I may be around, I don't know, but yeah, that's an important point there about brand clarity. Just stimulate conversation. That's that engagement element of social media building that I've been talking about. So what we're talking about today is raising capital, getting sponsorship as well. I want to get into that now because there's a question here from Nadine Levert-Langlois. She said, Richard, what's the best way to get sponsors? So one thing I've done in the past is given, say, a small amount of capital to a startup business. And I think in a way, this is going to be similar to the question earlier from Joe Rossano about obtaining private capital. Purely getting business, your business moving by having money come in from someone who has some capital to invest. And totally on a private side, it's just down to kind of getting that conversation going with them. One huge error, let's get into the nitty gritty of what's happening on social media a bit, is one huge error people have is when they start getting some traction, so you get some content out, you start getting some comments. The biggest mistake is ignoring them and going, oh, okay, I've done my part of the process. I've put out content and I've got a load of likes and comments and maybe even shares as well. That's absolute suicide, because what you have to do is every time you put out new content, you're hoping more people will come back again. But what you're not doing, if you ignore them, is you're not validating their decision to like, comment, or share your stuff. What you need to do is actually engage with it. The second mistake people make is that for them, engagement actually means saying thanks or you're welcome or something like that. And sure, sometimes you don't have time. Seriously, being slammed so much that means that sometimes that's all you can do. But as much as possible, you need to go a bit deeper. If someone decided, made a conscious decision, I'm going to actually write a comment here, for you to then come back and just say, yeah, thanks. It's like, okay, that's that then. It's far better to go a bit deeper and say, right, this is a really important moment because someone has just come into orbit around me. How do I keep them there? What you need to do is give them another reason to hang around. Ask a question. How about that? Actually dare to give a bit and have a conversation with them. So I see it all the time. People who put out a post, they get a load of comments, and it's like crickets, you know? It's like, are you even online ever in that next 24 hours looking at that post and engaging with people? Because otherwise it's missing the point. Putting out content for the sake of it isn't going to get you anywhere. Real content marketing and, you know, that use of time, effort, and even money is then valuable when you focus on the thing that matters, which is actually the conversation you're stimulating. So when you're doing that, it's a case of saying, like, how do I stimulate more conversation? And if you see my Monetize You course on therichardmoore.com, you'll see the idea is that you not just give them a reason to stick around by asking maybe a question, but then you take it a bit further where if they feel like there's some real love, you maybe then hop onto a direct message. Very, very important. Ultimately, why are you doing this? It's because you want engagement. Unless this is purely for social reasons, the whole point is for engagement, to warm up an audience. You're not warming up an audience by providing content and no conversation. Okay, so in terms of Nadine's question, the best way to get sponsors, I would wholly believe that the best way to get someone to sponsor your business is to firstly make them aware of you before you make that approach. Without question, the acceleration I've had on LinkedIn recently has been mad. It's been, like I say, 2,700 followers in the last 3 or so months. If you look at the posts consistently, not just several thousand views. I mean, I think it was a post the other day. It was 25,000 views, something like 250 likes, about 80 or 90 comments. The point is that every single post is getting a depth of engagement, not just views, not even just likes, but conversations with other people, multiple people liking, like deep within threads and other bits of comments and things like that as well, whole things going on. That depth of engagement is because of spending time against this, spending time on every post, every day, checking in with the post you put out and having conversations, replying to as much as I can as possible, replying to literally every single person who's being engaged there. What it means is that your spread, your reach, the net you cast, the scope of your message, if you like, can reach more people. It reaches way more people than you can imagine. Suddenly every day is 10, 15, 25 people asking for connection requests. You get the parasites, sure, that's life, but also you get the interesting ones. Fascinating stuff. The other day, an executive producer from a major TV channel started watching my stuff and then started sending me messages. Someone who's head of social media for a celebrity chef did that recently as well. Someone who's CEO of a major food chain here in the UK. All this stuff is all because I'm consistently showing up, but I'm also making sure these conversations are stimulating more and more discussion. So when it comes to asking for a sponsor, it gives me that moment. Obviously, it kind of gives me the right to go ask someone. I present a great case. Hey, and I'll get into detail on that in a second. Hey, here's what I'm offering or whatever. But I've earned the right to ask because the person has demonstrated they like my stuff. So this is the point of, I feel like I'm advertising a bit here. This is the point of the Monetize You course. It's moving yourself from cold position to a place where you have a huge amount of earned right to ask for something. And what it is you create what's known as a queue. I've developed this kind of term like a queue, which is like a compliment or someone starting to display or verbalize they have some sense of like, wow, I really feel like there's some kind of debt here to you. Like, thank you, my God, this is amazing, what you've provided me. Then should you feel you need to, because that person is correct for you, maybe they clearly have invested in businesses or whatever, then you've earned the right to say, let's talk about this, or would you like to explore this? And most people don't like being sold to. Everyone loves to buy. Most people don't like being sold to. But the best chance you're going to get of selling to someone is when they're so warmed up they want to listen to you. That's why when someone stops you on the street to ask you for cash, you say no. And even if you don't and you stop and talk to them and end up giving them money, your default subconscious reaction is to say no. But that's simultaneously why a close friend or family, when they ask you for £100 because they really need it, you say yes, because you're familiar, comfortable, there's trust, you buy into them. They've earned that, unless you don't like them. Okay, so Christina, you have to work harder. Joking. So the point here is that we need to focus on building the earned right to ask. Now, the other side is, of course, the pitch itself, which is the same with any investor pitch. This is the problem I get a lot of the time, is that people ask and they're not delivering a good enough offer. When you're asking for money, you don't talk about what you are going to do. You talk about what they are going to get. It's as simple as that. Show that, this is just sales 101, but show the person the win. Don't explain what you do. Most people don't care what you do. The science shows it's like 8% of people buy for the actual nuts and bolts. And something like 60% of people, or the reason why people buy is because there's a good connection and excitement about what they can win. Focus on the win for them. So here is what I'm proposing in a nutshell that you get as a result of working with me. And then, in principle, if that sounds exciting, then you can go through the nuts and bolts. The big old pitch pack, no one cares. It's hilarious. I'm one of the things I coach a lot. I'm doing this each week with one of my clients in London, is looking at emails they're sending out. It's hilarious. The 15-page media pack that no one will ever read. The 17 lines of text with all these other lovely flowery bits of information in the email, no one will read. They go straight to the bottom. What is it you want? How much is it going to be? Okay, because shouldn't you, you should be able to build the rapport and the connection and the sell and the win in a very short amount of time. Okay, so there's a lot of selling I can get into here. There's a big old can of worms. I'm going to put the lid back on it. But the short version here is talk about the win for them. The other thing, this draws back into Joe's question as well, getting private capital, also getting sponsors, Nadine, is focus hard on demonstrating you've understood the downside. Because someone who's a half-decent investor, this is certainly what I do whenever I put a small chunk of money into a startup, is I focus all in on asking questions about if they've thought about what happens when things go wrong. Because to err is human, right? As Shakespeare said. So if you don't think about what the downside looks like, not because you think it's going to go wrong, but to demonstrate you have that side covered. If you don't, the investor certainly should or probably will. So you bring up things like, now here's where there could be issues. Here's my thinking. Here's how I've worked around it. Here's the knowledge gap built up in this guy. This guy is my partner who covers this because I don't have that knowledge. And so that means we've got that bit covered. Should this go wrong, we've got this. You see what I mean? So you're covering both sides. People don't just want to know how they're going to win. They want to know how they're not going to lose, if that makes sense. Make sure you cover both here. And yeah, Tina, as you wrote there on Instagram, forecast and risk management are crucial. So very good point there. I can go on all night, but I hope you got a general vibe about that. And Nadine, DM me if you want, and we can talk about strategy for your particular sponsorship. Just want to shout out again to everyone who's stuck on the stream there. Hello to Instagram Live. Hello, Facebook Live. Hello, YouTube. Hey, everyone on the podcast as well. This is episode 96 of Startup Business Q&A. 5 weeks from today, right now, at this time, I will be in the Shard. Thank you to Site Improve for sponsoring the event. In the sense that they are setting up the meeting and hosting me. That sponsorship, Nadine, came about because I connected with people or a person at an event I spoke at a couple of months ago. We engaged, we built trust, we built familiarity. Then when I wanted to make the ask, it was a no-brainer. And it's hard to say without sounding arrogant, but it was almost like this is my perception, is they felt excited to host me rather than like, okay, then go on, you've done a good enough sell. And that's the important thing. Okay, so hopefully that makes sense. Ian Tisker on Facebook. I just closed a new client watching this stream by doing just that, explaining what they receive. There is the win right there. Thanks so much. Kind of that's what makes my day, Ian. Thank you very much. That's massive. Using this stuff is everything. So many people watch. What you need to do is use this and take action as well. So thank you very much for that. That really matters, mate. Let's get into some more questions. Otherwise, I'm just talking about the same stuff, right? So a few more. Lewis Clack, how do you start and maintain a low maintenance business? Hands off as far as possible. You want the easy win, right? So look, I'll try and make this in a nutshell for you. When you want to start a business that's not going to use too much of your time, you need to think about what kind of product requires very little hands-on. You need to look at the kind of product or service that requires very little, has little moving parts, and also however many elements as possible can be automated. That's why I like service as opposed to nuts and bolts. I don't have a factory that manufactures something. All of my service is kind of IP, and the courses are built, and that's that. Then people can automatically go through and buy them. So think hard. Where can you automate? Where can you get VAs involved? But the biggest thing about building businesses that are kind of streamlined like that is you must make sure you make peace with the fact you're probably going to be hard at it to start with. Okay, there's so many apps and plugins and things like that can automate stuff, but you have to work your face off to make it all work first. If you do read Tim Ferriss's 4-Hour Work Week, read it with the right perspective. He's a very intelligent guy. This isn't some loser who was just kind of like, I want life to go easy for me and didn't put any work in. The guy went to Princeton, so he's bright. But what he did was he's really in that book, he's really given clarity to how he went about building a business and then streamlining it. And that's something I've done with some of my online work, is that I've worked my face off building something and then streamlined it. Perfect example is next Thursday at 7 o'clock in the morning, I will be shooting the final parts of my LinkedIn course, just to demonstrate how I got from 0 to currently 2,700 followers, but also built out the thing to get a load of opportunities as well. Literally step-by-step actions. That's gonna be a load of work, load of production on the video and all that kind of thing as well. But once that's locked into the website and plugged into the e-commerce side of things, what it means is then I can step away and then it should run itself, in the sense that if the marketing is done right, if my ads team with Facebook work on it correctly, then it will drive people through, people will like it enough, people will buy it, and then of course the rest is automated. So it's very, very possible. I think first is look at the product or service. If you can try and look at things that don't have too many moving parts, that makes life easier. But maintaining a low maintenance business, just don't try and step away too early. You know, if you get VAs or people who are going to help out or take on parts of it, recognize that no one's going to do it as well as you would. You know, it might be that you get 70% or 80% the quality of turnout of work or output of work that you would personally put into it. But the trade-off's obviously you're saving time. But just recognize that not everyone is going to do as good a job as you might. If you're okay with that, then that should work out. Look as well at all of the immense amount of plugins and apps and things like that. If you look at the Entrepreneur Business Club, this is the premium group. If you go to the richardmoore.com, you can see it's now under the products. Entrepreneur Business Club is the Slack platform. You've got different chat rooms or channels where you can engage with other people like you. There's about 100 people there at the moment. If you jump onto that, membership is automated, okay? The trial is automated. The taking of your monthly payment is only $9 or whatever, but the monthly payment is automated, and the notifications and updates are all automated. So in terms of me being involved, well, I'm producing content and helping stir the conversation, but otherwise it's letting people do their thing, and the whole thing is run by apps and plugins. And I think that's a very valuable example of a low maintenance business or income stream there, Lewis. Tim, you've asked a question here. I'm sorry, because I've got cameras in the way of each other. Is that even possible in the very beginning? Wouldn't that be an exception? I don't know what part you're talking about exactly, but I do feel to begin with, building a low maintenance business requires a high maintenance business to start with. There's no real such thing as one that just kind of, you know, runs itself from the beginning, unless you're very lucky and something has been set up that you just hop into. People like to think of things like, you know, a Shopify business or something like that, you know, or some kind of drop shipping business. The reality is it's a vast amount of work and research to start with. You might get there eventually, but you've got to recognize that's the big thing, that there's a lot going in. Minimal effort on your business comes eventually when the templates and certain things you need to be kind of doing every day can get streamlined. Look at things that are low brain power. Look at things that are repetitive, and those things you can probably automate. That's the beauty of that 4-hour workweek book. He took a business and he demonstrates how he automated each part of it, and that's fantastic. And then he checked in on that particular business 4 hours a week. Doesn't mean he's doing nothing all week. He's working hard doing other stuff, but Tim Ferriss really explains that quite well. So hopefully that helps. Anna Soricio, big shout out to you and thanks for the question. Richard, when do you start employing, and who's the first person you should invest in? Yeah, I feel personally you should start employing just like you should start selling as soon as is possible. I'm quite the stoic, so I would always prefer to not be going all bling and like drawing out money for myself. What I would be far more interested in doing is staying broke and taking that money and putting it into people who can help me scale. You know, put off the pleasure of drawing out loads of money and showing off and buying fast cars and nice watches, and build something, and then move to a place where you can, you know, then you can do that kind of stuff later on. You should probably employ as soon as you can, but I feel that you don't have to get people on payroll. I have a team of quite a few people now. There's probably like 7 or 8 people who we work with, but there's actually only a couple of people who are on payroll, as in salaried people. Now, the people in the team, they're paid a fee, or they're paid in value, because it might be that I give them something else. Maybe I help coach their business, or for one guy, I'm a non-exec for his company, so a non-executive kind of advisor, if you like, in return for some service that particular business provides. So the point I'm making is that you can get people to help out early on. You don't have to wait till you can afford 40 grand a year to pay for someone. The other thing is that in terms of your question, Anna, is who's the first person you should invest in? I strongly believe it really should be one of two. It should be a salesperson, or it should be an admin person. If you're a great salesperson, and by sales, yes, I mean marketing as well, because the two in 2018 are very intertwined, then that is the first person. Unless, that's the first person if you're really just not hot in that space. Maybe you're the more the CTO kind of person, you're the intellectual, technical person, you're the engineer that's built the service or product. You need that guy or person to go sell for you, then that's the person you need to get all in. And if you don't have someone like that, you're going to have to sell for yourself. But if you are, able to sell on your own, then the one person you need is the person who's going to give you the most valuable asset back, which is your time. And that's admin. And that's getting someone to do stuff for you. When I started getting people in my team to do things for me, so it might be the research on social for the topic areas I work in, when it was people who were doing production for me on video for influencer campaign, for instance, to be able to send something over and someone then do that work, that's massive. People to do kind of uploading of content and dealing with the back end of my website. I mean, I could do it, but then that's all consuming. Okay, I'm slammed as it is. So getting people to, the bottom line is this: can you find what role is it you need that's going to give you back the most time? It could be actually a web developer. It could be you running the show for content production, stuff like that. And then the web developer is the one who's actually getting uploaded and stuff like that, working with your buffer, scheduling stuff, but also keeping neat and tidy the blog or whatever it might be. All that stuff is all about saving you time. One thing I think is worth investing in, but I don't have a finance person on the payroll, but is an accountant. Having someone take care of that. My accountant now, they'll email me or send me some letters and say, right, this is happening. Here's where you need to sign. We've done all the rest. And that's worth several thousand quid a year because you get someone who's taking care of that. I could do it because finance and stuff that is accessible to, the average half intelligent person, but it's my time, and they give me, it's immense amounts of my time back. That's the important thing. So when you start employing, as soon as you can, by employing, it can be a team. Seriously, like Anna, I had a team of 4 or 5 people against a product I was selling once when I was of one of my own businesses, and they were paid nothing unless they got a deal in which they were paid double the industry average. Okay, so it made them go for it. The ones who didn't believe in themselves, who didn't think that they could sell it or didn't believe in the product, they didn't want to do it anyway, no problem. The ones who really were like, wow, what a great opportunity, they were cool with having no kind of salary because they knew they were going to get double in terms of the commission if they close something. And when they start generating those deals, it was very, very exciting for them. So helping people to be in part of your ecosystem is a good idea in that respect. Let's do one more question because we've got to finish up. So it's Christine Petelkurin. I hope you said your name right. Thanks, Christine. What to say when a prospective client says no thanks? Well, if you look at my LinkedIn today, so I'm linkedin.com/in/Richard James Moore. So do connect. Seriously, any of you on Instagram or YouTube or Facebook, if you're not connected with me, I really want to see you on LinkedIn. I've just produced a post about that today, about an hour ago. When someone says no thanks, here's the thing I see the most. Someone's pitching, someone's trying to build a value, someone asks, the response is no thank you, conversation ends. Big mistake. No thank you is feedback. It's not interested, it's feedback. What it means is you've not sold them enough. There's not enough value emotionally, intellectually, in terms of commercially what they get, but also there's not enough value in terms of the buy-in to you. And if that's the case, you're not there yet. The mistake when someone says no thanks is to say, oh, well, no problem, thanks a lot. What, are you giving up? That's ridiculous. So you need to keep going. So what I'm saying here is if someone's like, I'm not interested, no thanks, well, it's great because it means, okay, my approach so far has been no good. What do I do next? I now need to build some more value. Maybe I need to ease off a bit. But what I don't need to do is push harder. I've not sold them enough. Maybe I need to just ask them a question. Low intensity, easy to answer questions to bring them back round and keep going. And you know what? It might be that you need to wait 3 months and invest in conversation with them. Yeah, that's right. It takes a lot of time. But eventually the person will say yes, if it's the right time, if you produce enough value, if they feel comfortable, familiar and trust you. Because remember, people love to buy, but they hate to be sold to. So if someone really, really believes in you, they'll get there. If they say no thanks, you're just not there yet. It's a little bit of feedback, which is excellent. It means, okay, we're not there yet. Okay, let's go build more value by giving more. You know, pull right back from the close, focus on giving more value. That might be on that very call or meeting or DM chat you're in, or you might need to give them a little breather. Then 2 days later, you comment on one of their posts. Hey, that was really good. Send them a DM. Oh, I love that DM. And then you build up again. It doesn't mean no forever. It means no, not right now. Okay? Huge. This is huge. Some of the best deals I've done are the ones where I knew just to take a step back, because actually, for some of them, I didn't ask because it was clear I wasn't ready. You have to move to a point where it's almost obvious, that you should be working together. And if you're not there, don't give up. No thanks shouldn't be met with you going, okay, no worries, we can give it up. No, take your time and keep going. Seriously. And some people might not be ready to invest yet because it's just not their time. Ultimately, almost everyone gets there. Okay, it's really important. Just a question over here from Shara in India on Instagram. Is a LinkedIn account worth it? Right now, in May 2018, if I could only be on one social platform, I'm going to call LinkedIn that too, it would be LinkedIn. I'm not saying that Facebook's no good or Instagram or YouTube. They're all amazing or fantastic with huge amounts of users. LinkedIn since June last year has really turned the corner. Adding video means that content generators can really win. I joined 10 years ago on LinkedIn, but it was very much just this is where you upload your online CV or resume. But now it's conversations. It's better than a Rolodex. Okay, it's far more depth there. I would take a LinkedIn account over a Facebook account right now. That's how serious I am. I know it's not like I'm not all in on Facebook or YouTube or Instagram. All of them are big. All of them really work. But the algorithm for me is way more accessible right now. What that means is if you produce good content, you're involved in the content enough, in the community enough, you don't have to game the platform quite as much as with Facebook. With a Facebook page, not profile, you have to basically put money. It's very much pay to play now. The days of building community organically on Facebook are very much numbered and not really working as well. Yes, Shara, medium.com is just as good as well in the sense that you can generate something from it. But LinkedIn, I will take over Facebook right now. The good news is you don't have to decide on one or the other. You do them all. The big mistake I see all the time is when people say, hopefully this isn't you, Shara, and a thumbs up if you find this is the case. The big mistake is when people say, I'm considering joining LinkedIn, or I'm considering doing some LinkedIn work, or I'm considering producing content for LinkedIn. No, use LinkedIn, produce content, being involved in the community, and then consider where you go from there. Do it first, then decide what you do next, rather than deciding, because you don't know till you try. That's important, okay? So LinkedIn's huge. The course will be out very soon. I'm not saying that Facebook isn't any good. 1.5 billion users is pretty important. I just want to finish up there and just say thank you firstly to everyone who's jumped in on YouTube. I see there's a couple of questions there, so I'll get to you soon. Thank you so much, Facebook. Love you guys. And thank you, of course, on Instagram. Go check out that post. Hopefully that helps Christine. That post on LinkedIn right now, because that's actually answering a question as well. Connect with me on LinkedIn. So it's linkedin.com/in/Richard James Moore, all one word. I'm there. I would love to connect with you guys. But I will say goodbye and then